So traders, that is a wrap for the week. I want to teach you something in today's video that is one simple technique, one simple understanding of these markets on the deepest level of the price itself that applies to every market out there. That once you start to understand this, you can understand what's happening and also what's likely to come, and also why I'm utilizing this exact same technique, and you'll be able to see, to say that there's a massive probability we're about to see a nice rise out of the stock market, and so on and so forth around, looking at gold, silver, and also the cryptocurrencies and so on and so forth. So I also wanted to share that with you. I want to share that with you in today's video. So I want to share this with you here in the context of a theoretical chart first, right? So obviously we're looking at silver right now, but that's not the main thing I want you to know, because actually I'll bring up the stocky market, right? There's the stocky market. Anyway, and there's a few things here. There's one thing as I promised you there, but now I'm thinking about it. Let me teach you two things that are just foundational, that are really simple, that we can cut through the clutter to help us make good decisions. Not 4 indicators, 5 indicators, and all this sort of stuff, okay? Let me show you what I mean through here, okay? One of the most important things to understanding, especially when you're talking about big markets like the stocky market, right? Dow Jones and the major indices, those sort of things, right? One thing that you'll understand about these types of markets, especially, is that how the markets actually flow when it comes through these markets here, right? So what happens here is this, is that if we know in the context of, if we know that we have simple movements in markets, right? We have the flows of markets, right? The market flows up, market flows sideways, market flow down, okay? So we understand this concept here, right? Market flow. But here's the really important thing to understand about market flow, so you can see that where we are in the markets right now, what is happening, and then therefore what is likely to happen when it comes to the market flow of this here, so we can get a good understanding. And what I'm talking about here is this, okay? There's really 3 main phases the market goes in, right? We have what? We have market go up, right? Market go up, market do nothing, and market go down, right? We understand that, right? And we have the sideways period through there. Market go up, market do nothing, market go down. Now, here's the really important thing I want you to understand, right? That in any particular environment we're in, we do know that nothing, if we're going sideways, then that's a indecision time, not too quite sure. We're not sure what's going to come there, right? There's a lot of indecision here. But when we do start to actually break, if we're not going sideways and we start to break up or down and we start to do some trending movement, then we can go to step number 2, or this in those phases. And we need to understand how these phases are built in the market, so we can just get an understanding. And I always like to utilize this as in an upward trend, or I'm going to use the downward trend in the markets here, okay? In a downward trend, what happens? We go down, we go up, lower high, lower high, lower high, right? So we have those lower highs points through there. Let me see if I can do this here again. And what happens here is I like to use this in a utilization of energy using and energy building in the markets. So as you see in any particular market, right? If we're going, I'll use an example of going up, right? Go up, and then we create higher low, and higher low, right? So this is a nice upward trend. But in the upward trending phase, we have this trend, but deep within the trend, this is why it's so important that there's so much power in the markets. Deep within the trend of that here, we now go to 2 different phases in the markets. We have an energy using phase, and an energy using phase is the market has been using energy to either buy it up or sell it down, right? The market's using a lot of energy at that time. Then what happens, it comes to a period of time where we're starting to run out of energy, right? We run out of energy. And then that's what creates what? That's what creates the drop in the markets, the drop or the sideways phase. And then what happens is what? We have the low period here. It comes down roughly around 50%. People have been buying it up. They've been running out of energy. They're running out of money. They need to start selling off to take some profits. Then the market comes down. They're building energy back up, aka they're building their funds back up, right? And then you're getting ready to go again. Then it comes to a point in time when the buyers are they're refueled and they're ready to go again. And then they go through the energy building phase. And then the market sells off. Energy using phase, energy building phase, energy using phase, energy building phase. Energy using phase. Energy using phase is when the market's going up, right? And the energy building phase is when we're in this case here. Now the energy building phase I've found in trends can look like this here, right? There's a few different energy building phases. We can go up and we can have a sharp pullback, but as long as this low as long as this low here stays higher than this low here, we are now what? We are now still in an upward trend. That's one energy building phase. The other energy building phase is when we do that and we start to do something like this here, right? So it just slowly goes down, but we're still this low here, still high this low. Or the next one is when we just go sideways. They're the three types of energy phases, right? So we have the energy using is when we're moving a direction. Energy building is when we get these pullbacks here. The pullbacks either straight down or slow down or even just sideways. Now, that's for the upside. Oh man, that's for the upside there, okay? Here's the thing. When it comes to these markets, and by the way, guys, if you do need some help, that first thing in the description there, I'm giving away access to a full, complete, like 7 videos over 5 hours long, teaching you stuff like this in the free trading course that goes into a lot more deeper than I can hear right now on YouTube. So if you need some help, guys, grab back to that free trading course. First thing in the description, you're going to love it. You can see all the details over there, right? But here's the also thing as well too, right? So the first thing we understand that the upward movement here. And now I want to teach you about the downward movement. The reason why this is so important because it helps you understand what's happening right now in the stock market and also what's likely to come, at least for the short-term level here, okay? Short-term level. Now, if this is a top in the markets, and this is now the start of the down phase, this is the top in the markets and the bear market starting, right? There we go, a big crash starting. Okay, cool. If that is the case, what have we had just recently, okay? Look at this here out of the Dow Jones. What have we had? We've had what? We've had a very big drop to the downside, right? That there, S&P 500, very big, strong drop on the downside. Okay, cool. That's the first thing That's the first thing we see here, right? So if we understand the context of we've had a very big drop to the downside, this could be the start of a big downtrend. Yes, this could be the start of a big down move. Now, if we now let's go back to our sticky thingy-majiggy charts to help you. In a downward trend, what do we have? We have down, up, lower high, down, up, sideways, lower high, down, up, lower high, right? We have these periods through here, don't we? And let me draw that again for you, right? So we had the nice strong selling leg through here, and then we rally up maybe 50%, create a lower high, come back down a bit, maybe go sideways for a bit through here, come down, something like that, right? They're the 3 different phases in a downward phase, right? A bear market, aka a crash. So in the bear market phase, what do we have? The down legs, because the market's selling off strongly, this is the energy using phases, but there comes a point in time when we've just spent too much time using energy, right? You've been to the gym for an hour and you're tired, you just need a bit of rest. This guy, I went 2 hours, 3 a.m. and 4 a.m. this morning. And then guess what? And then we have the energy building phases. But the energy building phase now is what? We have this high, it now creates the lower high, and then we now go through what? Another energy using phase. And then we go through the energy building phases, and so on and so forth, and then the energy using phase. The energy using phase is what? Now the market's they're using a lot of energy to sell it down really strongly, right? This is now in a downward trend. Remember, with 3 different phases. Uptrend, we talked about that. Sideways, we talked about that. Now downward trend. And you can see that we go through these. Within a trend, yes, the trend and lower highs, as you can see, high, lower high, lower high. We understand that, right? But how these lower highs are formed is when the market does come down through here. If the market comes straight down through here, meaning we've actually spent a lot of time, a lot of energy coming to the downside, there will come a point in time where we start to rally back up again. If we're going to create a lower high, and this is going to be the downward phase, remember, that's a downward phase, right? That's a downward trend. That's a crash, if you're going to call it that. How that's formed is when the market comes down, we know we're going to get some sort of a rally on a bare minimum soon to around about at least 50%. And then if this is going to be the start of the bear market, we're going to start to see something like that, right? Now, again, we don't know right now. We don't know what's going to come next. But if we do know what's happening here, meaning we've actually had a very strong selling leg on the downside, we know that there's going to come a point in time where we're going to get a rally to then start that downward trend. We have it when a downward trend is formed by lower highs. An upward trend is higher lows, right? So higher low, higher low, higher low. That's an upward trend, right? Lower high, lower high, lower high. That's a downward trend. So a downward trend, we need to make a lower high first to confirm the lower high, to confirm now the bear market is starting. But how does a lower high form? How is a lower high actually formed in the markets? A lower high is formed by rallying down, and we have to rally up, right? We have to rally up. This could be the space of a 2-week period to create the lower high. Now, we don't know if it's going to be a lower high. Sometimes there's not lower high, and sometimes it keeps doing something like that. So the purpose of me bringing this into you, this is how markets work. We know that, right? If we look at this market here and you squeeze your charts up, forget my moving average. Moving average is actually step number 2 here. But if you understand the flows of these markets, you'll be able to understand that if this is the start of a big bear market, big downward trend, right? This is the start of this here. Lower highs, lower highs, lower highs. Then we've come down through here. Then we know the market has to rally soon to what? To form the lower high to then start the downward trend, right? Because a downward trend is lower highs. How is a lower high formed? We have to go down and then we have to rally up for a bit to then create the lower high. So a movement up, at least on a short-term level basis, is what creates the top, what creates the start of a big bear phase. So when I'm utilizing what I taught you just then, and I go to the markets right now you can see the reasons why. I don't know when it may be. Maybe right now we're forming the bottom, or we may have more downside to come through here. And then we form a bottom. But either way, we're very, very, very close to a short-term bottom. And then guess what's going to happen? We're probably going to start to see a rally at least back up to here over the next week or 2, maybe more, right? To around about the 50% level. So that's what's likely to come next. Why? Because it's just how markets work, right? This is where, like, if you're utilizing just the market flow, structure, whatever you're going to call it, right? Simple trend analysis and how the trend is formed, you understand that if this is going to be the top, yes, you guys may be right. You guys may be right. This may be the top. This may be the big bear market. Here we go. The big crash that's starting. If that's going to be the case, we'll get something like this, and then we'll probably get something like that. That may be forming right now. But once again, for tops in markets, major tops in markets, from uptrends to sideways movement to downward trends, remember, the market needs to rally first because that's how a lower high is formed. Now, I'm not saying a lower high is going to be formed, but utilizing what we see here now, we do know that a rally is likely to come soon, what's coming on a short-term level basis, due to the fact of how markets work. Now, here's also where it gets really, really, really important to understand here. Okay? We don't know when the rally starts, and it may have already started right now. We may be finding the bottom right now, and then we start to see a rally out of this, right? When the rally comes, we need to be alert to two things and not be so dogmatic on either side. What I mean is, we could either see this could just be a short-term shake and bake to the downside, because at least once per year, we get a 10% drop in the stock market on the S&P, and then most of the time it rallies back up and continues up, just like it did back here. This drop here was a 10% drop in the stock market, and then we had a massive rally right back up to almost a double top here. See that through there? It's like a big V bottom. So when the rally starts, there's either two things that this is going to happen, and we need to watch out to see what happens here. Does it A, come down through here, and then literally within 2, 3, 4 weeks, we've had something like that, and it's just kept going up? If we get something like this here, this whole thing here was just a short-term false breakdown to shake the weekends out, get all people fearful, and if we get something like this, we're probably on our way to 7,000 on the S&P. Now that's scenario number one. Scenario number two is we start to use Fibonacci levels to see where we are at in the markets, right? If we go low to high here, if this is the bottom, right? If this is the bottom and we start to get a rally, we're probably likely to start to see a rally up towards these levels all through here, right? Then we can start to see what happens through here, because there's two things here, right? The first thing is that we rally up through here. We make a rally up through here, and then we start to pause, and then we start to roll over through here. If we get this scenario, this is a massive rounding top formation, right? If we do, and this is where you don't want to be, because the environment we're in right now, guys, this could just be a short-term shake and bake on the downside, what I call it, short-term lot of freak out before we see it again. Again, this is the exact same thing that happened last year here. Everyone was saying the exact same thing that happened right now, and we end up continue doing that. That could happen there. So that's the first scenario. The second scenario is obviously what we talked about before, is that we actually rally up. It might rally up, maybe pause here for a bit, and then just continue up from here. If we get this situation, once again, get ready for a 7,000 on the S&P 500. But on the short-term level basis, we know how markets flow, and we know the market is not just going to keep going straight down. How does the market flow? It might go down. We may have a little bit more downside here, right? We may get another 1 or maybe 2 days to the downside. But we're getting very towards the end of what? This downward leg through here. And inevitably, we're going to start to see a rally, which might last a few weeks, and then we can reassess. So this is a really big example of we can get ready for what's likely to come. But this rally may be the start of a massive move up, or it may just be a very short-term move up for a few weeks, and then we start to see the top of the market. Let the market do the talking. Okay, and that's all. And that's the same thing for all markets. That's the S&P. This is the Dow Jones. Same sort of thing, right? Same sort of thing. We're getting very close towards the trend lines as well too, right? So we're probably likely to see a rally here soon, and then we can see what happens from there. Same for the Nasdaq. The Nasdaq is obviously, that's going on with the Nasdaq right now. That's where the Nasdaq is right now. That's that right there. So we could be getting ready for a nice pop to the upside, and then a move back up from there out of the Nasdaq from there. So that's what's happening with the actual stock market there, guys. And if we go have a look at things like gold and silver, we can see things like gold and silver, same sort of thing, right, guys? We can see how all these markets work the same way. Look at this here. We had a rally up. We had to get a drop to what? To form the higher low. If this is going to be the start of a big bull move in silver, what is a big bull move? It is up, down, higher low, up. We might go down, create another higher low, so on and so forth, right? That's how a big bull move is. If you're thinking big bull move is straight up every day, then you know that's not the reality side of things, right? So that's why I was warning people about this drop here, and that's what we got through there, right? And then now the thing for gold is that we've had a very nice move up. We've had a little drop to the downside, and now we've had a pop to the upside. We actually hit the 3,000 level. I don't think this has had enough time to refuel to go for another big move yet. What may happen is, see my moving average through here? Right, this moving average is coming up all through here. What may happen is we may come down through here, hold, and then we may be getting ready to go again. So if we get something like this, the second move, then we're probably going to get going again on the actual gold and silver there. But there we go, guys. There's a bit of an update around gold and silver breakout. What's happening there? My whole thing here, guys, is that I really wanted to teach you and help you and guide you through the deepest level of how these markets really flow without all the indicators and crap and all that other things, fundamentals and news and articles and unemployment and Trump and all that stuff. Forget it. Let's just come down to the simple structure of these markets and how they flow, so we know what's probably likely to come real soon from there. So traders, if you are struggling right now and you really do need some help, and you know you need some help, then you need to apply for my coaching program, okay? Go to Get John's Help. There should be a second link in the description. Click on that. That's going to take you to the application, and you and I personally will speak on the phone, where I'm going to be coaching you every single week. If you're missing opportunities, if you don't know what to look for, you don't know control your mindset, you don't know how to let your profits run. Like right now, there's some amazing quality opportunities that generally happens once a year. That's happening right now that could potentially set you up just enormously, right? So if you are struggling right now, guys, I know that I can help you, right? If you're going at this alone and you're trying to make a lot of money, what are you doing? My whole program is that I give you what's taken me 20 years to figure out. Do you want to spend 20 years trying to learn this sort of stuff yourself, trial and error and losing money and blowing up trading accounts? Or do you want to invest some good money and shortcut your process instead of taking 20 years to figure out, it might take you only 6 months? Go apply for my coaching program right now. I promise you it will help you out. Go to getjohnshelp.com right now, fill out that application form, and you and I personally will have a good chat to see if you're a good fit for my coaching program and to help you out from there. Speak to you soon, guys.